Let's start by looking at some data that is not available to the public so you can build some baseline data as to what is happening in the real estate market and why. So first, if you were not aware, we have the ability to see how many showings are happening on a daily, weekly basis throughout the GTA, right down to a specific pocket. I use this information all the time for my own listings to gauge how much interest there's going to be before a listing comes out. That helps us with pricing, what strategy we're going to use, etc. So if you're not aware, just very high level, this is simply for the city of Toronto, so 416. We average about 32 showings on average per day. Obviously, it will skew greatly, but on average, 3,200 showings. And based on offer volume, we get about 152 offers per day. So if you break that down further, what that means is that for every 20 showings that you have on your property, you're going to get one offer. Now that's on average, and that is skewed by condos where you can have a number of showings and no offers. Typically, I hope to see one offer for every 5 showings, one offer for every 10 showings. Those are pretty good stats. Obviously, it can't always work out, but it really comes down to marketing and all that stuff. I had a listing this year, 2 showings, one offer, and it was sold, right? And that's your best case scenario. But anyway, the reason this information is important is because it kind of gives you an idea on price action, and it gives you an idea for sales action, and it's a leading indicator basically to show us what's going to happen in the following 4 weeks. And here's a case in point. So on this side, we have 2025, and here we have 2024 showings. So as you can see, showings kind of go up, right into March, and they peak out March, April, May, and then they start going down in the summer, then back up in the fall. So we had a massive chunk of showings that just got taken out in 2025, and this is when Trump started, talking about all his tariffs and all that stuff. So people got spooked, nobody did anything, price action, everything kind of got killed. What's more important, obviously, are offers. Generally, there's a 2-week lag. So as you see showings going up, within 2 weeks, offers start going up, and once offers start going up, generally sales go up as well. Now, the difference here is, okay, so both 2024 and 2025, we had high inventory, we had more offers here in total, in general, mostly because a lot of it was front loaded in 2024, whereas here we're missing a ton of offers that would have happened that didn't happen. And then towards the fall of 2025, like we're seeing right now, offers are starting to pick up, reflecting similar to 2024. In fact, they actually stayed a little bit stronger towards the tail end of 2025, so call it November, end of November going into December. We'll see how December fares. I don't expect to have much price action as a lot of listings are getting delisted. But point is, we're reverting back to what we do seasonally. Now, before getting back to offers and showings and their importance relative to this market, let's go down memory lane and talk about price action over the last 3 years, which were arguably some of the slowest years in real estate in recent history. So 2023, here's our seasonal line for price action. And here's what actually ended up happening. So 23, we had a strong spring market. It peaked, but then it dropped substantially. Fall market, almost non-existent. Off we go, and we ended the year pretty much flat. In 2024, it was somewhat of a similar story. In fact, we ended the year very weak in 2023. Now, in 2024, we didn't know what to expect. Obviously, we knew it was going to be another flat year or slow year. And we started off actually really slow, with January actually posting a negative month-over-month price action. And then it spiked in February, and then it kind of flattened out. But again, we had a bit of a spring market. And then once again, same thing as the year prior, no fall market. I mean, it tried to recoup here a little bit, but once again, another flat year, relatively speaking. And here we are in 2025. Once again, a very weak January, and then this entire price action that happened here, once again, back to the Trump tariffs. This is where everybody got spooked. And as you remember, showings dropped, offers dropped. So this is the first time we actually didn't have a spring market. Even if you go way back to the financial crisis, 08, 09, I believe even then, when things were slow in 08, 09, we still had some action during the spring market. This year, there was no spring market. And because we had a weak spring market, everything is kind of based on a relative basis. Going into the summer, things slipped so much that we're actually seeing a massive price decline on a relative basis as we're ending 2025. Objectively speaking, 2025 is going to go down in history as one of the worst performing years for real estate in the GTA in recent decades. And that is supported by all the stats. Lack of sales transactions, massive price drops across all asset classes, the condo sector lagging, a ton of condo completions coming to fruition in 2025 and 2026. However, I come back to this baseline stat of offers and showings. Despite the anomaly that we had with the tariff talk, which basically crushed the spring market, which is the peak market for real estate in the GTA, we still had it come back and recoup somewhat to a semblance of a normal market back in the summer and in the fall. Now that does not reflect in any of the stats because again, sales were still low, prices are still going down, and that is fine. But what it does show me is that there's still a stable rate of demand across all sectors, meaning there are buyers, there are offers being submitted, but obviously buyers are a lot more strict. It's a buyer's market, so obviously you're going to be lowballing, and sellers are not going to be accustomed to getting a bunch of lowballs, so they're not going to entertain them, so stuff just ends up sitting. So we're going through price discovery, and we're going to continue going through price discovery most likely into 2026. But it does show the demand is still there, people are still active, and that gives me hope that I think in 2026, barring any anomaly events such as tariff talk or anything like that, we might actually have a better year. Now, we're going to have a better year relative to the worst year in 20, 30 years, but it's still going to be a bad year in terms of what a normal market looks like, but it's still going to be better than 2025, I believe. Now, there's a couple of reasons for why I think that is happening. Despite a slow economy and the job losses you hear about, unemployment is still relatively stable. I think the stock market is what props up a lot of the confidence that does remain with buyers right now. If the stock market drops, that could be the anomaly event in 2026 that totally destroys confidence in the market, and then I can see it getting even slower. However, if those two things stay stable, we're already seeing that mortgage pre-approvals are going up towards the end of 2025, which is a signal or a leading indicator that we're likely going to see more buyers come out in 2026. Affordability has improved greatly by way of lower prices and lower interest rates. And I've even given out examples in the past where, from an investment point of view, certain properties are now cash flow neutral, something we haven't seen in probably a decade in the city of Toronto. Like, you can buy condos right now where you just put 20% down and the place will carry itself with the rent you're getting currently, despite rents kind of going down as well. So those are the positive things that I'm seeing and why I remain optimistic going into 2026. But obviously, that's cautious optimism. In terms of metrics, the one metric I keep a close eye on is this right here. This is liquidity. So meaning, if we typically sell 7,100 homes in the month of November, we only sold 5,000 homes in the month of November this year. And the bigger the spread is, the worse it is, meaning that things are not selling. And we have been running at this sort of spread between 20 to 40% lower than what we typically sell for a very long time. And we can see the impact of this. It means longer days on market, it means more active inventory, and it means lower prices. So until we see some sort of a liquidity fix in the short term, unfortunately, I don't think we're going to be able to see a stabilization in prices until this kind of fixes itself. So as you see, towards the tail end of 2024, we actually were very close between what we should be selling versus what we're actually selling. And 2025 was going to be a half decent year until the tariff talk came, and that's where everything kind of got destroyed. So we'll see if this year, once again, when everybody delists their properties at the tail end of December going into January, it creates this artificial lull of low inventory, but buyers are still out there. So for example, we currently have 25,000 active listings. We should have about 15,000 active listings. But as you can see, even in a market like this where we have a saturation of listings, everybody pulls their listings, or a lot of people pull their listings, and there's a sweet spot in between January and March where we have an artificially lower number of active listings, yet the buyer pool is still the same. So some people try to take advantage of this time, and I think it's a pretty smart thing to do, because sometimes by the time you get to April, May, which is typically the spring season, by then you have way too much competition that you're competing with, and the buyer pool is still the same. It didn't increase the exact same by the same amount that listings increased, especially when you have such a large amount of actual active listings. So that being said, I do believe the first 3 months of 2026 are going to be very interesting. The first 6 weeks, usually, first 5 weeks of January, first weeks of Feb, usually give us a pretty good indication based on action if we're going to have a good spring market or not. I think right now I would stick my neck out and say I think we're more than 50% likely to have a better spring market this year in 2026 than we did in 2025. Probably more, maybe 75%. So with that, I'll see you in December. Have a good one.